Welcome to the Building and Growing podcast. We're delighted to have Matt Ong from Ctrl Alt with us. Welcome, Matt.
Thank you. Glad to be here.
Yeah, mate, it's fantastic to have you here. And, it's a lovely summer's day here in London. Perfect time to talk about tokenization. So,
Yeah.
Look, mate, before we do that, do you want to give us an intro to yourself?
Yeah, of course. So, as you mentioned, I'm Matt. I'm founder CEO of Ctrl Alt. We'll come on to a little bit about what we are and what we do in a moment. But yeah, I started my career in investment banking, and kind of saw some of the problems that we were having in financial markets, and saw this new wave of technology that was coming and disrupting this space. And very specifically, the world that I was operating in at those investment banks. And so, after doing 6-7 years of investment banking, which was brilliant and great place to learn and really cut your teeth, started building my business back in 2020. Left banking to do this full time in 2022 once we've kind of laid all of those foundations. And fast forward to today, we're a business across 3 regions, 40 people, and really exciting time for us.
Amazing. Look, well, first of all, congratulations on that growth.
Thank you.
I'm pretty sure we met back in 2022 when you were just closing a pre-seed or a seed.
Yeah, I think really early days.
Yeah.
Product was different. Yeah, team was very different. And funding was obviously very different as well. So yeah, very early doors.
Yeah, but look, I mean, like the best thing is to see that growth over a time which, has been a difficult time for startups. So, but I'm sure we're going to dive into that success and traction further down the line today. But Matt, why don't we start off with maybe a definition of tokenization? Yeah,
great place to start, right? Because people ask what we do, and sometimes when we talk about what we do, it's not immediately clear because people don't know, what does this term tokenization actually mean? So tokenization, quite simply, is representing some sort of asset through a token on the blockchain. Mm-hmm. So taking that even one step further back, what is the blockchain? The blockchain is basically just a record. Think about, you've got a piece of paper, and you've got on there, you write down who owns what, right? A blockchain is quite simply just a digital record, a way to record, who owns what.
Yes.
And so what tokenization is it's recording who's owning what on that blockchain. And so what tokenization can do as a consequence of that is it can make how you invest in assets, how you operate assets, how you manage assets a lot more efficient. You can cut out layers of the structures. And so everyone's very excited about this term tokenization of, representing assets as tokens and being able to then trade those tokens and invest in those tokens and get exposure to these asset classes. But that's fundamentally all driven by the technology that sits behind it.
Fantastic. That's great. And, you mentioned that you'd been in investment banking for 7 years. And, I suppose for the final 2 years, you were focused on sort of coming up with what Ctrl Alt would be. Can you talk us through the process of why you founded Ctrl Alt?
Yeah. So at the banks, we were often asked by clients to do more, to do a broader set of assets. And also working at the banks as well. We were working on all of these incredible asset classes, but people like myself, we weren't able to invest in those asset classes. And so started looking at what was around to help break those barriers down. So not just for me as an investor, but also for, some of my customers at an institutional grade. And tokenization was an earlier concept back then. It was very much spoken in conceptual terms. It's like, this is theoretically possible, but there wasn't the regulatory frameworks really to do this. Mm-hmm. There wasn't any examples of this really happening elsewhere in the market. And so we understood the technology. We did a lot of time, with my early team building the foundations. But it was primarily driven by the problem statement that we saw, not only in my role at the investment banks, but also on a personal basis, right? We'll come on to some of the things that we do in a little bit, but one of the big examples of tokenization is with regards to real estate. The idea that, well, what if I could invest in real estate with, smaller amounts of money? And so that was something that was very topical to me at the time, wanting to invest in different things, not just public markets.
Yes.
And tokenization was a way to empower that. So that's really what got the idea going, problem statement in personal and professional life. And then we started building from there.
Fantastic. That's great. And, before when you were doing the introduction, you mentioned that you're live across 3 markets now. Are you able to talk us through where they are?
Yeah. So we have an office in London. London's our global HQ. We have an office in Ireland. And our newest office is in Dubai, which we opened last September. So we are licensed in the UK and we're licensed in the UAE, and that's where we're most active. But yeah, really exciting to have teams across the world and be expanding our footprint like that as well.
Fantastic, that's great. So look, I mean, you mentioned real estate as a use case, but perhaps we could dive into some of the use cases. Number one, that you've got live, and number two, perhaps that you see coming in the future.
Yeah, so it really depends on the market, right? So the markets operate quite differently, and by that I mean the geographical market. So taking the UAE, Dubai as an example, if you think about what assets come to mind when you think of the UAE, it's Dubai specifically, it's real estate. Real estate is such a big asset, such an attractive asset class.
Yes.
And so it made sense that Dubai wants to be able to offer this asset class to more people. And so it was just immediately obvious that this was an asset class that made sense. But also, tokenization has, as I mentioned before, has long been linked to real estate. And so it was kind of the match made in heaven that you've got this asset class that's super big, and you've got the use case there with the technology and bringing that together. So what we do in Dubai is we do what we call a native form of tokenization, and that's where you tokenize, you represent the asset, the property, the real estate itself as a token. And that token can actually be transacted in fractional format. So you don't have layers involved, you don't have counterparties, you're actually owning a fraction of the title deed of the property. So it's an incredible initiative that that's been worked on with the Dubai government and with the regulator and with local players as well.
Yes.
So that's a fantastic use case. It's going really well. It's being scaled. Loads of other countries are looking at trying to replicate the same thing. So that's probably one of the most prominent and public examples of the work that we've been doing in tokenization. But then if you flip that over to UK and Europe, what this requires, what real estate tokenization requires, is it needs buy-in from your central land register to be able to bring those records on chain. And so, doing that in the UK and doing that in Europe is harder to get, the land registries to do something like this. So that makes a challenge for real estate. But what's really interesting in the UK and European markets is there is a gap for being able to provide exposure to different kind of alternative assets. Real estate is a type of alternative asset, but in the UK and Europe, we see more financial alternative assets. So think about private credit, think about private equity funds.
Yes.
Can we try and give people, whether you're an institutional, whether you're some sort of sovereign wealth fund, can we help you allocate to these assets in a better way? Can we give you broader exposure to these asset classes, and can tokenization be the driver of that? And so that's something that we've seen a lot of in the UK and in Europe. So quite different, looking at private credit versus real estate in the UAE.
Yes.
But ultimately, they all come under the alternative asset umbrella, and that's where our name comes from. We are Ctrl Alt. We are giving people control over alternatives, finding a better way for you to get exposure to these assets. But again, each market, different affinities, different assets.
Indeed. And look, I mean, I suppose in the past I've certainly come across alternatives and fractional investments. I guess fractional investments through my time at Revolut, alternative assets afterwards, and there was a lot of sort of the structuring of those alternative assets through, say, limited companies, whether they were UK limited companies that then issued share certificates to investors within them, or, you know, overseas-based structures. Are you able to talk through how tokenization maybe reduces cost or increases the speed relative to, you know, that sort of fractional ownership through limited companies?
Yeah, that's what we consider to be like the first generation of giving people exposure to these asset classes. And there's definitely still a place for that to exist, right? But tokenization is the next generation of that. So in some instances, it allows you to remove the need for that entirely, right? So if you look at the real estate example again, tokenize it at source rather than tokenize an SPV or a wrapper around it. But there are some asset classes that don't have a central record of ownership, right? And so you do need a legal wrapper like an SPV around it for you to be able to give people exposure to it. But tokenization can also help there, as you've kind of just alluded to, right? So in traditional structuring, if you think about, you create an SPV, you create a UK limited company, for example, and you want to have 1,000 investors invest in that SPV that then owns another asset. 1,000 investors is quite a lot of investors to then go and manage.
Indeed.
You think about doing that at scale as well. You think about having, you know, hundreds of SPVs, each with thousands of investors in. It becomes a bit of an operational nightmare to try and manage all of that.
Indeed.
And so that's where the blockchain element becomes really powerful, because what happens if you start recording that ownership on chain and you've then got a token? What about if you want to sell your share in that SPV and you transfer your token to me, and that automatically then updates the records of ownership rather than going to then make filings and make manual paper updates? So tokenization can help in both cases, not only where there is a central, you know, register and bringing that register on chain, but where there's not and you need a wrapper around it, there is also a much more efficient way to do that through, you know, blockchain technology.
Yes, indeed. And so, look, you know, you've spoken a bit about both institutions and kind of individuals investing in, you know, alternative assets through tokenization-based infrastructure. Are you and Ctrl Alt more focused on individuals or on institutions?
Yeah, good question. We're a B2B business, so we focus on institutions. Even where there is a retail component, we don't face the retail customers directly ourselves. We go through a partner distributor, right? And that's because our skill set isn't in distributing to end retail investors. You know, it's a very costly exercise to go out and do that. We're focused in providing the infrastructure and the tools for institutions to invest themselves, or for them to provide access to their customers on the other side. So yeah, we're a B2B business.
Fantastic. And, you know, one of the key benefits that you mentioned before was the fact that all records that say on the ledger are tracked and are traceable. And, you know, if we mention the word crypto and tokenization are different things, but, you know, in the case of, say, crypto theft, people have been able to track that theft all the way along the ledger. So are you able to talk a little bit about, I guess, the safety and the traceability of tokenization-based transactions?
Yeah, you know, people often associate, well, they did certainly initially, they associated tokenization with crypto, and then it was associated with all the hacks and security concerns around it. And so, you know, when we talk to big institutions, you know, that's one of their biggest concerns, because they're not necessarily informed about actually how does this work.
Yes.
So there's two things there. One, the transparency, right? So as you mentioned, you're able to track every transaction that happens on chain. So there's a full audit of what's happening.
Yeah.
So that's very helpful. But taking one step back, how do you prevent that happening in the first place? Because, you know, I could be an institution. It's great. I can see my stolen token moving through the network, but I didn't want that token to be stolen in the first place. And again, that's where the technology helps, because into these tokens, you're able to build in certain features. You know, you can have KYC flags, for example, or freezing capabilities or clawback capabilities. And what that means is, if you've got a token that's held in your wallet, that token can't move to someone else until it's been an approved transaction,
Yes.
what we call a permissioned transaction. And so what it does is it actually puts better controls in place in how you operate to say you can't actually transfer that until the other person has gone through, for example, a KYC and AML check, which will allow that flag to then be lifted, and then that transfer can then happen. So if anything, it should be seen as a tool that can improve, security and compliance rather than something that people should be afraid of. Again, I think people associate it with the DeFi world, which is where you don't know potentially who the counterparties are.
Yeah.
We operate in a more centralized environment on chain where you need to know who those counterparties are. We deal with regulated financial products, so we need to do that. And so
Yes.
that's actually very helpful, the technology in that case, because we can put those barriers in place.
Yeah, fantastic. And I guess another thing, Matt, is, we've spoken about, say, the UK and Europe as markets. UAE, it's an interesting one. They're very innovative. 85% expats, in the UK, in the UAE. I want to, I guess, move the lens slightly to, more sort of emerging markets, where, there might not necessarily be a land registry there, but things like crypto and stablecoins in particular have had really high rates of adoption. What role do you see tokenization playing in emerging markets?
Yeah, really interesting question. Because when you think about how this technology can disrupt what we do, if you're already starting from a more basic base, then you've got even more improvement then to get from that technology, right?
Indeed.
The challenge that you often have with developing markets is that you need some sort of infrastructure to be able to plug into. So Dubai was a fantastic example because they also had some infrastructure there for us to be able to connect into and do this quite quickly. If you think about real estate, and if you think about some countries that have paper records, you're still going to need to get those paper records into some sort of digital format. So there is a step that you still need to take.
Yep.
Whereas if you already have those in digital, the step to then make it into, onto a blockchain is a lot easier. So I think it's going to be massive in the developing countries, and I think it can do wonders. But the reality is that to implement it in a lot of these developing markets is actually quite challenging, just because, they're starting from one step behind. So absolutely it's going to happen. And I think it's going to have material benefits. And I think, once they get it digital, they can move to the next stage quite quickly. But there is still a bit of a gap there. Yeah,
fantastic. And look, I guess why don't we have a bit of a chat now about trends? You've mentioned that you deal with regulators a lot. Have you been seeing any regulatory changes?
Yeah, we're seeing regulatory changes across the globe, really, and it's really great to see because when we first started this business, it wasn't that way. Tokenization was kind of like a hush topic. You can't really talk about it. Yeah. The fact that you're using blockchain was kind of like, this we just use this behind the scenes. And it was quite difficult to convince regulators that this is the same. This is the same as what we're doing today. It's like an infrastructure piece that sits behind it. That rhetoric has changed completely. In the UK, for example, we've now got the digital security sandbox. So you've got the Bank of England and the FCA coming together with an environment to be able to test digital securities and tokenization. It's fantastic. And you're seeing similar initiatives, across Europe, across Asia, and you're seeing, the UAE, for example, launching VARA, a dedicated regulator for virtual assets.
Yes.
But it doesn't stop there as well. You look, across the pond, you look at the US and their change of tone when it comes to stablecoins, tokenization. You see, Robinhood's coming out looking at tokenizing stocks, Kraken tokenizing stocks. That change has happened on the back of regulatory changes and regulatory clarity that's happening across the world.
Yes, yeah, fantastic. And stablecoins are another real hot topic at the moment. We've had the Genius Act in the US recently. Any sort of views on what's going on in that space?
Yeah, I mean, as someone that operates in the tokenization space, stablecoins or the ability to make payments on chain is what unlocks an incredible benefit of tokenization. So think about if you now own a share that's a token, and I can make that payment on chain as well. So I pay you in a stablecoin or some other digital currency. It means that I can immediately settle that transaction. It's both happening on the same digital rails.
Yes.
So I don't have to think about my T+1, T+2 settlement. It's settling instantly.
Yeah.
When you think about payments, dividend payments, that can then happen automatically,
Yes.
on the same rails again. So, there's a lot of excitement around stablecoins in my world because of what it unlocks. Today, most of that payment leg sits off-chain, so it sits in traditional cash, and if you need to then make large cash payments, you're then at the mercy of the traditional rails to settle that cash.
Yes.
So we're super excited about what's happening in stable coins and central bank digital currencies, because it unlocks a massive benefit of your asset now sits on chain, but your payment leg also sits on chain, and it's on the same rails. And it unlocks the things that everyone has been talking about, the kind of holy grail of tokenization.
Indeed, and we did mention crypto before. I suppose crypto has gone through its sort of booms, its busts, its different cycles. How does that impact tokenization or the rhetoric around it?
Yeah, I mean, we distance ourselves a lot of the time from cryptocurrency, often because of the negative connotations that it sometimes has with institutional customers, with our customers, right? Cryptocurrencies have a value in this ecosystem, in our ecosystem for sure, but we typically distance ourselves away from it. However, a lot of capital that is going into investing in the infrastructure for blockchain technology is driven by the cryptocurrency markets, right? So
Yes. Yeah.
when the cryptocurrency markets are doing very well, you see a lot of investment happening into the space, into the picks and shovels, the infrastructure, into, the interest just massively spikes. And so that's beneficial for us. So even though we are not tied to the crypto markets, we're kind of indirectly associated with those movements. And what's been quite interesting is that sometimes the crypto markets move and then our space kind of follows. But what's been quite interesting is that a lot of the changes in the crypto markets at the moment has been driven by regulatory changes, and that's put interest back into the crypto market. And so maybe that's a sign that the crypto markets are going to be slightly less cyclical and more driven by adoption in the market of the blockchain technologies itself, potentially. But certainly for us, it's been super beneficial for over the last 12 months or so. The trend upwards in the crypto markets for sure.
Fantastic. Yeah. Look, Matt, this has been a really great introduction into Ctrl Alt and tokenization, and the work that you're doing in order to help, I guess, institutions, use your infrastructure to build access for alternative assets. Is there anything else that you want to add about Ctrl Alt before we move to takeaways?
I think, look, it's a really exciting time for us. Because of the things that we've just mentioned, right, and we've got massive tailwinds in this space. It's super exciting to see some of the initiatives that are being worked on by governments, by institutions, by people coming together in this space, and it's great to see tokenization in the news and the coverage that it's getting. So, no, it's just a really exciting time for us, and we're very much looking forward to being in this moment, expanding, growing our presence, entering into new markets, building relationships with some of the new institutions, some of the new governments, rolling our products out into new ecosystems. So no, just an all-round exciting time for us for sure.
That's fantastic, amazing. And look, Matt, any key takeaways you'd like to share with the audience today?
I think people should think about how tokenization can actually impact what they're doing, and people don't realize as well how much tokenization is happening in the background. Rewards cards, for example, they are managing the reward systems on chain.
Yes,
you would never realize that there are some really big reward schemes that are now managing that on chain. And so I think people should expect to see this infrastructure coming into their day-to-day lives. It's already happening. People might not realize it, and people should be really excited about that. We've moved on from just pilots and initial use cases. We're now really gunning for what's unlocking the true benefits of this technology. And so I encourage people to keep an eye out for this, and and hope they embrace this wave of technology that's coming.
That's fantastic. Matt, thank you so much again, and congratulations on the success Ctrl Alt has had, and we look forward to keep watching you grow.
Thank you. Appreciate it.